Hello everyone, and thanks for tuning into the Financial Investor channel. My name is Brent, and today we're going to be doing our end of the month portfolio holdings for April 2018. So I'm recording right now, it's almost 1 in the morning, so I'm going to try and get through this pretty quick. If you guys do have any questions over anything in this video, go ahead and let me know in the comment section below, and I will do a follow-up. So end of March, we had $5,154.63 in our portfolio. We had made roughly $15.24 in dividends during March. So that video had a lot of feedback. I had 13 thumbs up, 26 comments, a lot of back and forth. Now, our portfolio holdings for M1 Finance, we're now sitting at our total cost in of how much we've actually put into this portfolio of $5,650.57. The total value of this portfolio is $5,222.69. So did we go up or down in value over the last month? So we were at 51.54.63. Now we're at 52.22.69. So we went up roughly $70. So that's pretty good. We went up $70 of equity. If we take a look here at all the shares and we compared it where it was before, where it was now, we increased our equity position, of course, which allowed us to buy more shares, but we were also paid out dividends in April. So let's go ahead and quickly take a look at the activity for April here. So starting here in April, I had no dividends that were paid out to me at the first week of April. I wasn't able to reinvest any dividends, so my $10 scheduled deposit. So every week on Monday, I schedule $10 to deposit automatically into my Roth IRA. This is my self-directed Roth IRA. I'm not paying any fees to do any sort of trades. I'm not paying any fees to have this account active, and I'm not paying any fees to schedule anything. So if you guys are interested, you guys can check out the video on how to schedule your allotments. I put $10 in because this is the minimum threshold that's needed to cause a buying order. So you need a $10 minimum in your account sitting in order to trigger the buys. So this allows me to reinvest any dividends, sort of like my style of drip, back into my portfolio. If I was paid out over $10 in dividends, that would automatically cause a drip. But because my portfolio right now is pretty small as far as capital goes, I'm not being paid out over $10 in dividends. So I add $10 to automatically reinvest my prior week dividends plus my $10. And that allows me to average in every single Monday and just kind of keep it consistent. So my very first week of April, I was able to buy stocks such as Avery, Caterpillar, Johnson & Johnson, and Praxair. My second week of April, let's go ahead, and it's my second week of April, I had $15.33 to throw in. That's because I had my $10 auto deposit. I also got paid out $5.30 from Kimberly-Clark and Walmart. That allowed me to buy 4 additional shares. I bought Avery once again, Caterpillar, Praxair, and Simon Property Group, that real estate investment trust. So $15.31 automatically was invested into the stock market there. My third week in April, I got paid Altria Group, that smoking company that took like a 20% dive this month, paid me out $3.35. I also deposited $10 for a total deposit of a purchase of $13.35. So I bought Kimberly-Clark, SPG, and Walmart. So all of these stocks are purchased automatically. I don't have to do anything. My fourth week in April, look at this. I made $6.04 of dividends for WPC Carry. They paid me out $6.04 in dividends. I held this one on my Roth IRA over on Merrill Edge. I think they paid me out over $60 on there. So that was great. I also deposited my $10 from the bank. That triggered $16.05 to go in. This purchased Kimberly-Clark and Altria Group during that down day. Remember when Altria went down like 20%? I was able to buy 0.13348 of a share. So that bought me some nicely. And then just my last My last week in April, I was paid out by Cisco $2.74. I again deposited my $10 for a total of $12.74. I again bought Altria Group and AT&T. AT&T recently took a dip as well due to earnings, and this is a great buying opportunity. So this is why I like to add that money in every week. That allows me to buy in. I was able to buy AT&T at $33.31 a share, which is a pretty good purchase price. You don't see AT&T really fall below that $32, $33 mark. So that was a great buying entry point where they have a yield of around 5 to 6%. So that really bumped up my portfolio. So overall, we were paid out, let's see here. If we add up everything above $10, let's go ahead and do that for April. So I bust out my handy dandy calculator, and starting here on April, so I'm going to position my calculator here so it's towards the bottom, and 531 plus 335 plus 605 plus 2.74. So in the month of April, I made $17.45 in just dividends. That's not money I invested myself into the stock market. This is money that I was paid into my portfolio that was reinvested into the stock market for me. So that's really good, right? That's my fourth month invested in this portfolio. I made $17.45. So if we go to my portfolio right now, again, there's my value. This portfolio currently is down 6.84%. That could seem pretty bad, but over the long term, I'm not really worried about it right now. It's really not that bad over the long term. If we take a look here at our total gain, we've actually lost $427.88 of equity, but because we've made dividends, we've actually made $50.05 of dividends. So we're still holding the original shares that we originally bought. Our shares just went down in value a little bit. So it's similar to buying your very favorite pair of jeans at the store. They're $50 at the store, but you go back a week and now they're 20%. They're marked down 10, 20%. That's a better deal. So you'll buy them again because you like those jeans. Well, this is, it's probably a really bad example, but those jeans actually pay me dividends for just kind of holding on to them. So I never actually lose those pair of jeans. I don't lose any sort of stocks because I'm not selling them. So those stocks will continue to pay me dividends, and those dividends will be reinvested into those stocks that are down, allowing my shares in those stocks to increase, and then increase my payout ratio or increase my payout amount. So, 4 months in now, I'm getting paid $50.05. So by month 12, we're going to have around $200 of just dividends paid out. So right now, while my portfolio is currently down, if the stock market does turn around and I do make back that near 7%, and I also get paid $200 in dividends, I'm going to be sitting pretty nicely. Otherwise, if the stock market does continue to fall down, I am still going to make those $200 in dividends that'll be reinvested back into the stock market, able to purchase more shares that are added into my portfolio and averaging down on my initial cost. And over the long term, all of these are blue chip companies that'll increase in value when the time is right. So here is a graph that I keep for month to month. So my base investment, this is for March here. You can see March. I had $5,560 money in the stock market at the time. I had been paid out $23.12 in dividends. I think this one's a little bit off. I think this is a little bit off because I didn't add in the dividends that I was paid out last month onto it. Anyways, my annual income is roughly $203.91, and I was down $428.49. Now, these are the main numbers you want to take a look at right here. My original cost, my current value at the end of March, my average dividend yield, and my annual income. Now, going forward over to April now, you'll see that I punched in those numbers from March into my April. So now I am sitting at $5,630 as my base investment. I've now made $50.05 in dividends. My annual income has increased by roughly $3 there. You actually see it here. $2.56 is the difference. And my invested difference here, it went down slightly here just due to the, let's see, that's the negative change. Huh. Okay, so I have to work on my numbers just a little bit. So the main differences here is I copied over the data anyway. So my original cost, I added $67.45 of new money into the market. Now, $17.45 was not my money, right? So if we take out $17.45, we're left with $50. So I added this month $50 of fresh money into the stock market. But with the dividends, that's a total of $67.45 added into the stock market as brand new money. The current value of my stocks went up $68.05. My average dividend yield increased by 0.01% over last month to this month. That's due to Apple increasing their dividend. So Apple increased their dividend payout from 63 cents per share to 73 cents per share. And Avery increased their dividend per share from 45 to 52, and Johnson & Johnson, I think that's the other one here. Johnson & Johnson increased it from 84 cents to 90 cents. So that's a pretty good increase. I hold Apple primarily inside my Merrill Edge portfolio, so that is a 16% increase in dividend for Apple there. So that's a really nice increase. So I increased my annual income over the last month by adding $67.45 of new money. I increased my annual income by $2.56. So my total income changed from $203.91 to now $206.47 over the next year. It's like if we were to start again from this point, in 1 year I'll make $206.47. Again, every single month I'm adding new money. I'm also getting paid out dividends. Those dividends and that new money is reinvesting and buying more shares. It's averaging my stocks down. It's increasing my average yield. The stocks are also continuing to increase their dividend payout or their rent, and that's going to be increasing my annual income. So all of these stocks eventually will all increase their dividend payouts, and you're going to see my annual income jump up sometimes, maybe from 206 to 210, 210 to 216, 216 to 225, and you're going to see it slowly but surely continue to build up. So right now we're in May, so January, February, March, April, May. So I should get paid out from AT&T already. That should be something that's paid out already in my account. Going tomorrow, I should see it. Then I should have the Blackstone Group. Apple ex-dividend is coming up at the end of next week. So Apple's going to have their ex-dividend. Caterpillar's also paying out sometime, and then SPG. So some pretty good stocks coming out this month. So some fun stuff to look forward to for next month's video. So that is basically it for this video. I try to make it quick. What am I at? 14 minutes. So if there's anything inside the video that I missed, skipped over, you didn't understand, or you want me to recap and review, let me know in the comment section below. You guys can go ahead and do stop it and see this is March and this is April, so you can see that the cost, my positions, the shares, they changed here. I increased my shares. I increased my my buy price, decreased, so I was able to average down. So some of these, MO for example, went from 69.47 to 68.99. So those additional shares that I purchased allowed my average buy price to go down, and that really helps my portfolio over the long term. So that's it for this video. hopefully you guys did enjoy it. Again, if you did, remember to like, comment, and subscribe. If there's anything you guys would like to have hit back up, let me know in the comment section below. As a friendly disclaimer, I'm not a financial advisor, tax professional. The information in these videos is for entertainment and fun. This is not investment advice. This is just me as a financial investor trying to help others make their money work for them. This is just a small portfolio that I made over on M1 Finance. It's my wife's Roth IRA. I think it's a great portfolio, pays out dividends all the time, and I like to see that portfolio grow. So that is it for this video. Thank you guys for tuning in. I will see you next time. Have a great day. Bye.